Hello, welcome back to the Entrepreneur Investor Connection. We are dealing with a crypto crash right now, and I want to start talking about what I see happening, what I know people are doing, and I also want to make sure I have people understand like what they're going through and how to make sure they're in a good space about everything, right? So the first part of this is I want to make sure people understand I'm not a crypto channel, right? So one of the biggest things I see is right now I'm creating a lot of crypto content, but I want to basically make sure people understand why I'm doing that, right? Like I'm creating a lot of content around crypto. One, because it's trending, right? People are talking about it. People want to know about it. But the reason why I'm doing that is because if you know me, you know I'm an innovation guy. I'm an innovation consultant, a coach, production company. And innovation is the reason I got into innovation is because I saw it as the way to level the playing field for people like me, right? I come from the Bronx. If I wasn't in innovation, I probably wouldn't be able to be in the rooms I'm in, talk to the people I talk to, because that was the way for me to set myself apart, to say, okay, I'm going to figure out what's on the cutting edge, be there. So when people want to know about it, I'm the one they come to. So I did that with websites, apps, all this kind of crazy stuff. And crypto is the next version of that. Eventually it will be I believe, the currency of the future, but we're early, right? And that's what we have to understand, that we are early. And when we look at this space, it's volatile now, but I'm going to show you every industry is volatile in the beginning, and you got to basically understand what you're doing when you're putting money into these markets, right? So one of the major problems I see right now with everybody getting into cryptocurrency is they have like a false expectation of what to expect return wise and how fast, right? And I think that's because of three things, right? You are either a investor, a trader, or a gambler. When you put your money into this space, you're doing one of those three. And a lot of times I even have to check myself when I'm putting money into a coin. I'm saying, okay, what am I doing here? Am I investing? Am I trading? Or am I gambling? Right? So what is the difference? Investing, if you've ever invested in anything, you're probably going to hold this thing for more than 10 years, right? So if you invest in property, you don't invest in property and think in a month, I'm going to 10x my money, right? No, you say, all right, in 10 years, I'll get my money back, maybe 5, maybe 8, but I'll definitely get my money back over time, right? And you're cool with that because you're investing. When you're trading, you're putting something in and you're saying, I'm going to get my money back out when I see something happen. Either it hits a certain price, some news happens where you're like, oh, I'm going to get out of that now, or you just want to make money when it's high, right? So people do this and people invest and trade in all industries, right? In real estate, right? You could buy a house and say, I'm going to flip it. And when it gets to this price, I'm going to sell it, right? So that's trading in a way. And because to me, an investment means you're willing to hold it for more than 10 years. If you're willing to hold it for more than 10 years, it's an investment. If you want to trade it within 10 years or less, you're probably trading. Gambling is I'm putting money down. I probably expect to lose it. And if I win, I win. Right. And what I think is happening right now, people coming into crypto mostly with the gambling aspect, right? People buying Doge, people buying Shiba coin. They weren't buying that because they studied the fundamentals of the project and said, I really believe in this. They put money in to gamble. And now they're looking at it as an investment, but they really were gambling, right? So you got to check yourself in the beginning of this. Like, what are you doing when you come in to this space? Are you gambling? I invest in real estate and gamble with crypto. See, but that's the thing, Joanna, real estate. I do it too with certain coins, right? Like I gambled on those coins. I was like, look, I'm probably gonna lose my money here. It's a joke coin. So I just put that money in. I said, I lost it. I don't care how high it goes, I lost it. And then when it went super high, I was like, I'll still think about it like I lost it. Right? Because who knows? It could go way higher one day, but I lost that money. It was a gamble anyway. Right? But then when I invest in stock, I say, all right, I'm gonna hold that stock for 10, 20 years. Right? I'm cool with the ups and downs of whatever that is. I'm gonna just leave it and not worry about it. Invest in real estate, same thing. But I have an idea. When I buy, if I buy like the thing when I bought in Las Arenas with the Airbnb, I said, all right, 5 to 10 years, probably closer to 5, I'll make my money back and probably profit from 5 years on, right? So I'm willing to hold that property for 5 years. Let's say somebody comes to me before 5 years and says, I'm willing to give you double what you paid for it. Would I become a trader then? Probably not, because I didn't buy it for the trader mentality. The reason I have a strategy overall that I'm sticking to in every asset class, right? It's not like one asset class I do one thing, another asset class I do another, right? Of course, I can choose to be a gambler in crypto sometimes, be a gambler in real estate sometimes, be a gambler in stocks sometimes. There's stocks that I gamble on too, right? So part of it is I really want to make sure people are not coming into crypto as gamblers and then be FOMO'd out of it. FUD, fear, uncertainty, and doubt. When you see all this news and you see the price plummeting, people jump out because they're scared. They're like, oh, this thing's going to go to zero. But these things don't go to zero. And I'm going to show you charts. And I know if you're on Instagram, it's hard to see these charts, but the link is in bio if you want to come see the chart on YouTube and Facebook. I'm in a bunch of places now. So the real fear of mine is cryptocurrency is the future. But if you're not doing the homework to understand why and you're putting it in as a gamble, you're going to leave the space and you're early. You're early. If you do this right and put money in there and say, I'm leaving this money in for 10 years. If you're really saying, I believe in this for 10 years plus, there's no way you're not going to make money. Here's a stat. There's never been someone that held Bitcoin for 4 years and has lost money. If you sold it when it was when you bought it, when it was like here and it got here, then it came down here and you sold it, you lost money. But if you held it and waited, it will come back. And I'll show you a chart. Actually, I'm going to show you a chart right now. It's going to be on YouTube. But if you want to jump and watch it on YouTube too, I'm going to show you a chart of the stock market since it was created, of crypto market since it's been created. And you're going to see how it's very similar. If anything, the stock market looked more volatile when you look back at it. So, all right, I'm going to share my screen and I'm going to start showing you guys some of this fun stuff. But of course, any questions, ask along. But the idea is I want to make sure people understand what they're doing when they put the money in, because I fear that people are getting in and then they're going to bail and never come back when they were in right now. It's kind of like when I said I saw Bitcoin was 30 cents and I didn't know what it was. I thought it was a gamble. And I was like, I'm not putting my money in there. And I should have gambled. Back then, I should have gambled. And that's another interesting point. A gamble can turn into a trade or an investment, right? Like, so for me with Doge, I put that money in and I gambled it. If that coin gets to one day $10,000, then it was an investment, right? Now it kind of went from a gamble to probably an investment because I'm probably going to hold it for 10 years plus. Why sell it now if I thought I lost my money and now it's up so much? I thought I lost it anyway, right? So now I'm moving it more to the investment side, right? So if you look at this chart on the stock market, I'm going to read it out to you. I'll give you the play-by-play. When the stock market was first created, it was February 1915. That's what it says in this chart, at least. The stock market number was at 1469. I guess that's like how much money total times by millions or something like that, whatever. Or billions. I don't know. Then it quickly went up to 2,500 in less than a year. From February to November, it went all the way to 2,500. Then by 1920, it went down to 1,000. So think about that. 2,500 down to 1,000. Then it went back up to like 5,300. So think about that. 2,500 down to 1,000, up to 5,300. Those are big jumps, right? And now I'm going to show you cryptocurrency. This is the life of cryptocurrency, right? Very much shorter timeline, but you'll see the same type of jumps, right? So if you look, when it first came out, nothing, very little. 86 billion. Then it went up to 820 billion. Then it went all the way back down to 100 billion, 137 billion. Then it went all the way back up in the last few months. It went all the way back up to 2.5 trillion, right? But again, this is all within a 4-year span. So people are getting in like here, expecting to time it and missing the timing and feeling like they lost money. Like I have coaching clients, crypto coaching clients that they pay me to help them manage them through this scenario. And they're like, oh man, I got it so late. I messed up. I lost so much money. And I'm like, basically, if you wait, you didn't lose money, right? Because they didn't invest in crazy coins. They invested in the Bitcoins, the Ethereum, and Matic, right? Which is a Matic. And I'm going to give you each three of those, how I see those. But I bring this up, all of this, because I know everybody's looking at this market and being like, should I sell? Should I sell? What I have right now, should I sell? If you sell, you definitely lost your money. There's nothing you can do about it, right? As soon as you sell, you lost it. Because if it comes back up, you're done. You lost that money. There's nothing you can do. But if you hold and stay in the game, there's no way you lose. And that's where we got to understand. There's a good book everybody should read. It's called Money Master the Game by Tony Robbins. He says the way people lose money is trying to be traders, right? So if you're trying to time the market when it does all these, and you saw even in the stock market, it did it. Early on, it did it. But then later on, it gets more stabilized. But again, I posted some on Instagram. It said, since the dollar came out and I forgot the full thing. The dollar went down 96%. The stock market went up 3 million % from that same time. This is going to start happening with cryptocurrency. Why? Inflation, right? If you know about inflation, you know every day, every month, every year, the dollar goes down in value, right? Because the government prints more money, there's more loans are going out, all these different things by the country. The dollar deflates in value, goes down in value. What do rich people do? Rich people invest to offset that, right? If you invest in a property that's going up in 1% of value a year, and the dollar's going down 3 to 4% a year, your money is better off over time, right? You start seeing that distance. Cryptocurrency is the next version of that, and you caught it early. But you're looking at this moment in time and thinking you lost money. But when you zoom out 10 years, 20 years from now, you're going to look and be like, oh, I made a shit ton of money. But right then, when I thought about it, I felt like I lost. The only way you lose is if you come out of it, right? Of course, these gamble coins, yes, a lot of those are probably going to go to zero. And that's why you have to understand what you're doing when you put money in. Because, and I'll tell you, even in, oh my God, I didn't even put on the Clubhouse. Even in the venture capital world and stock world, people gamble. People gamble on the fact that I'm going to invest in 100 companies, knowing 2 of them will be Amazon and Uber, and all the rest are going to fail. But that Amazon and Uber will make me millions of dollars. That's the difference, right? So it's the same idea with these coins, and that's where I come into it, and I think the same way. I put money in these coins. The big ones that I plan to use for, that I plan to hold for 10, 20, 30 years, pass them on to my kids pretty much, versus when I put money in Dogecoin, I was like, hey, let's see what happens, right? But I didn't think about that. And certain people think about like Bitcoin that same way. They think Bitcoin will go 5x and then they're going to sell it. And that's fine. You can do that. You're going to pay more taxes doing that, though. You need to understand that you're going to pay more taxes when you do that. So, all right, so I got some questions. Going on all around. All right, so I'm going to start. All right, Yvonne, hey, great info. Thank you. How much do you think we have to put in at first? What I tell people is put in, again, what mindset you want to be in, right? If you say, I'm willing to hold this for 4 years plus, put in as much as you want, as much as you can afford. But understand that you can't take that out for 4 years. If you can put in $100, $20, $50, $1,000, if you know for 10 years, for 4 to 10 years, you're not going to touch it, put that amount. But what I tell people is put in $20. The first thing I did was I put in $20. And what happens when you put $20 is you start to look at it more and try to understand it more. Because what I believe is people pay attention to what they pay for, right? So if you put in $20 and you look back and you're like, what is this Bitcoin thing I just put $20 in? Let me look it up on YouTube. Oh, it's the future of money, possibly. It's the replacement of gold. It fixes most of the problems with every other asset class. You can borrow off of it like a house. You know, there's a finite supply of it. That's the only thing like that. That's kind of interesting. I'm going to put in more. I'm going to put in more. I'm going to put in more. And it doesn't matter when you put in if you're willing to hold it for 4 years, right? I know people that bought Bitcoin when it was $60,000, $62,000. They didn't lose money, though. They feel like they lost money right now because they look at the number and they're like, oh, I lost so much money. But no, if you fast forward 4 years from now and Bitcoin's 300,000, they made money. But right now, it feels like they lost money. And if they sell it right now, they definitely lost money. So that's what I would tell you. I would tell you put in minimum $20. Just put it in. I tell people put it in Cash App, $20, and you'll start to do the homework. Because the real thing about this is if you don't do the homework of understanding what you're investing in any asset class, real estate, stock, crypto, you're gambling. Because how could you know? How could you know, right? That's like me, somebody saying, hey, I got a great property in Zimbabwe. It's $1,000 here, $1,000. I've never been to Zimbabwe. I have no idea what the property looks like. I have no idea how it's going to make money. I have no idea. That's gambling, right? So are you gambling or are you trying to make an educated investment? And this is where the government is trying to help people by creating what's called they create laws that you can't just invest in things without being an educated investor. So right now crypto is outside of those laws at the moment, and that's a danger, but it's also an opportunity, right? So if you do your homework and you get into these spaces and you understand them, you can make a lot of money. All right, next one, Fresh Carreras. Hearing some say that they're cashing out now, waiting for this big dip to get low, then snatch up again. Good strategy? I don't think so, because if you bought higher and it's going down and you sell out, you're trying to time the market. If you try to do that, you're in the trader area, right? So I told you, investor, trader, gambler. Traders, that's the hardest way to make money out of all three, including gambling. Because gambling, you put the money up, you say I lost it, and you don't think about it. If you come back and you see, oh wow, 20x, cool. Investing, you put it there, you know it's there for 10 years, you don't worry about it. In the middle, that trader, where you're trying to time the market, that's where you lose sleep. That's where you're like, all right, I think this is the high. Let me sell it here. Damn it, it keeps going up. All right, so let me buy back in. You lost that money or that gain. Then it drops. You sell. And that in the book, the Tony Robbins book, he says that's the number one way to lose money. That's the way everyone loses money. He says, especially he's talking mostly about the stock market in this book. He says most of the gains come in short spurts that if you're not in the market when they happen, you miss out on them. So never come out the market, because you will most likely miss out on those opportunities. So that's why, again, I'm saying if you want to be a trader, the way I'm trading is I'm leveraging my crypto to buy more in markets like this, right? I'll put in new, but if I want to buy more of some crazy coin, I'll borrow off of my Bitcoin, Ethereum, Matic, and buy that crazy coin. Because if that crazy coin goes to zero, I still got my main asset. Of course, there's gambling. That's a little bit of gambling too, because let's say the market crashes really low, my loan could get called and they can take some of my good assets. So there's all that. That's part of where like trading is dangerous. It's a gamble. It's more on the gamble side than the investment side. But you can play that middle. And I'm trying to learn how to play that middle. Right now, I'm in places where I almost had a loan called on me. I had a loan that was at 100% liquidation. And luckily, I had money rating to put it in there and fix it. And then I pulled all that money out and I put it in a stable coin, which is USDC, ready to buy more stuff. All right. So like counting cars, what about the bots that are built to? Like counting cars, what about the bots that are built to I don't know. I believe the bull run isn't over for this year. What's your thoughts on it? How long do you think the market stay low before jumping up? This is where, again, the timing thing, I don't know how to time this market, but I am thinking there's still more upcoming, right? To me, I'm buying during this drop, right? Because, of course, it dropped. Like, it came back. What I see it as, this is why I say it's a huge opportunity. Remember, like 2 weeks ago, when everybody felt like they missed out and they were like, oh, man, Matic is almost $3. Bitcoin is whatever it was. Ethereum was $4,000. Man, I should have got in when it was 2,500, 20. Now it is. Like the movie rewind itself and put you right back in that place. And now people are like, ooh, I don't know about this. I think it's going to go to zero. Part of it is like, do you believe in this or are you gambling? Right? Again, if you're gambling, okay, then this might not be the asset for you because this is a volatile asset. And when you put money in this, you're going to be, if you're looking at it in a short timeline, you could lose because if you're trying to take it out in a month, yeah, you may not get 20x. Everything is not Shiba and Dogecoin. But when I tell you about Shiba, one of the things I see about Shiba is I call Shiba the ideal crypto newbie thirst trap. What do I mean by that? And I'm going to show you on the screen what I mean by that. I'm going to go to the market analysis of it, and I'm going to show you why I say what I say about Shiba. All right, so when you look, first of all, this is CoinGecko.com. I'm on CoinGecko.com if you want to go check that out. It shows you the market caps of and what the top 100 cryptocurrencies are on the homepage, but then you can search for a specific one. So I'm going to search Shiba, right? So everybody looks at these cryptocurrencies and they think, oh, if it's at 0.0000 whatever, if it gets to 1 penny, I'll make a bunch of money, right? But what you don't understand when you think that way is it's not about the cost of the crypto or the stock. It's about the market cap. So when you look at Shiba, why I say it's like the perfect thirst trap for crypto newbies is that look at this 0.000007. So everybody's like, oh my God, if it reaches a penny, I make $1 million, right? 2, look at the market cap. It's $3 billion. Wait till I show you how much it needs to get to for it to reach 1 penny. Okay, so we got 1 0. So 1, 2, 3, 4. So that's to go up 1,000 times. So 1,000x from here for it to reach 1 penny. Okay, so what that would mean is that the market cap, that means people have to put money into this project at 1,000 more times. That would put Shiba in the 3 trillion market cap, right? Let's go back to the homepage. Let's look at what Bitcoin's market cap is. Bitcoin's market cap is 630 million, not even 1 billion. Shiba has to become 3 billion to reach a penny. Ethereum, people use Ethereum all day, every day. It pretty much runs thousands of companies are run off Ethereum, and it has a market cap of 225 million. Shiba will have to be 10 times more valuable than Ethereum for it to reach 1 penny. So what does that tell me? That tells me that product was set up to trick people into buying into it, and it worked, and it's working. Similar with Dogecoin. Look at Dogecoin. Dogecoin's market cap is 38 billion right now, and you really can't do anything with it. I just told you, Ethereum, there's thousands of companies running on Ethereum, and it's worth 225 billion versus 38 billion for something that doesn't do anything yet. That's why. But again, I gambled on that coin. I didn't gamble on the Shiba coin because I was out of gambling money at that point. I said, oh, my gambling money is in Doge. So that's where you have to understand, like, what are you doing when you're putting money in these? All right, so I believe the bull run will happen until the end of the summer. That's my belief, but I don't know. The reason why I believe that is because they're touting something called DeFi summer. DeFi Summer is Decentralized Finance Summer. What that means is once the world understands what decentralized finance is powered by cryptocurrency. I'm going to give you a little quick understanding what decentralized finance is. Centralized finance is banks, right? So right now, if you want to do anything, you want to put your money away, you want to save, you want to borrow, you got to go to a centralized bank, Chase, Citibank, your local community bank. You go in and you say, hey, I want to open an account. They say, okay, give me your ID. Give me, we're going to run your credit, whatever. We're going to minimum of $2,000 or you get charged $10 a month, whatever. Blah, blah, blah. You do it. You set up a bank account. You could bank with that company for years. You come in one day, you say, hey, you know what? I need a loan. Something came up. I want to borrow $1,000. Let's look at your credit. Let's look at, we can't give you that loan. I've been banking here for 10 years. You know, I have money in a bad time. You know, I need this. Yeah, sorry. Centralized finance has that ability. Decentralized finance was created by technology. Coming back to my first point of why I'm in the crypto space and talking about it at all, it's the innovation to disrupt that industry. The financial industry that does what? Treats minorities different. Think about why the wealth gap is so different in this country. White people versus black and Hispanic. Why? Because early on, they didn't let people buy homes, right? They didn't let minorities buy homes. And the home value, they bought an asset instead of creating only owning cash. They bought homes. White people were able to buy homes. When they bought these homes, the value of those homes rose. The value of the cash went down, right? So we are stuck with cash, buying whatever we want to buy, but we can't buy assets. We couldn't buy assets with that. So what ends up happening is over years and years and years, we have less net worth than people that were able to buy homes. Fast forward where we are right now, what decentralized finance is going to allow and is allowing, if you understand it and do the research, it allows you to buy an asset right now for $10 that will go up in value more than homes, and you can borrow off of it without asking a single person. Think about the opportunity that is. And then think, all right, am I looking at this in long enough of a timeline to really understand, or am I gambling? If I'm gambling, and all right, let me jump out now. I lost $1,000. Cool. Or am I willing to wait 4 years and make $5,000 off that 1,000 or whatever it is, right? That's where we really have to start putting our minds to. All right. So, like I said, I think the bull run is going to go past the summer. I'm going to be looking at a few things. I told you right now, everybody asking me, what are you doing right now with these crazy? I'm buying 3 coins with my money. Matic is the first one I'm buying. Why is that? Because I believe, and I see so far, the proof is there, Matic is going to power the decentralized finance summer. Why is that? The gas fee is way less than Ethereum, and it's built on top of Ethereum, so it has the security of Ethereum. So that's very stable and is being used ridiculously right now by NFT people, by banking, by decentralized finance in general. So number one I'm buying is that. Number two, I'm buying Ethereum because, again, Ethereum is being used like crazy. And I think it is going to power the future of technology and business. I could be wrong, but that's my bet. And that's a long-term bet. That's an investment. I know I'm going to hold Ethereum for 10 years plus. I know I'm going to hold, and then Bitcoin. Bitcoin, I'm doing at the lowest percent, right? I'm only buying Bitcoin lower because I think Ethereum and Matic will grow in more multiples in this next few months than Bitcoin will. I think over time, Bitcoin is the safest asset, but right now, I want to make the biggest gains, and I'll probably turn those into Bitcoin once I feel like I made enough, right? So I'm trading in one point in some of that, right? I'm talking about investing. I'm not going to really sell my Ethereum. I'm going to really think about selling my Matic once I see what happens after Ethereum 2.0 comes out and this decentralized finance summer ends. I think those things are going to happen similar timelines. But again, I don't know. This is what I'm thinking about. So when I buy Matic, I'm in the middle of trader an investor. It's not a gamble because I see it being used. It's being used probably more than most of these projects, right? And that's why it did very well with all these crashes happening. Matic held up better than most. It's still going down though, but it's a good time to buy it if you haven't already. This is not financial advice, by the way. Do your research. Do your own research. So when I look at Ethereum, I think long-term investment. When I buy Bitcoin, I think long-term investment. When I buy Matic, I think trade / long-term investment. If Matic sticks around and Ethereum 2.0 comes out and Matic still has a value and is used, I will make Matic a long-term investment too, because then that means Matic can go to $10, $20, $100 if it still is valuable after Ethereum 2.0 comes out. But if it's not, then I'll just trade out of it, and whatever money I made, I'll dump it into Bitcoin. So that's pretty much my current strategy for free. I got people who pay for that. All right. So Milan, you got any questions? And then I got some questions on the chat. All right. Like counting card. All right. So like counting cars with gambling, how about the bots that are built to show you where the market will go? So I don't know, because I mean the data is too new, right? Like bots are only created off data, right? An AI can only be powered by data. Like you can't make a robot that doesn't know what to do, right? So the only way for it to know what to do is you give it data. So they're going to give it data of the market. Most of this market is brand new. The only thing that's been around for a long time is Bitcoin and Ethereum. So what data can they really show? But I'll be honest, when this market becomes a lot more mature, the data for this market is going to be insanely good. Why? All of this information is public. You can see, this is why crypto is such an interesting asset class. You can see every transaction from these companies. You can see every day how much they're doing. And in regular stock and real estate, it doesn't work like that. You can't know by the day how well that property is growing in value or whatever. Stock, they have quarterly reports that they have to put out. They don't got to report every single day, but these cryptocurrencies do, right? So if you take certain data sets and you merge them, you might be able to create bots that do understand what's going to happen. I don't know if they exist yet, though. Once they do, trust me, you'll hear about it from me. All right. So, good job. Thank you, Emilio. Remo Ruin. Check this out. It's a new coin. Yeah, right. Big opportunity for serious gains. I'm already getting spammed. That means I made it. That's a spam right there. I don't know about that coin. I never even heard of it. You got to look up, do your own research. He could be right. He could be wrong. You got to do your own research. Short Bitcoin 100. Oh yeah, see these. I got some bots already. Nice. That means I'm making it, kids. All right, Milan. Any questions? Vivica, any questions? Anybody on the Instagram Live, the YouTube? All right, I'm buying more spreading investments into multiple accounts. Yeah, I mean that's another thing to really make sure you're doing. Don't be too much in one, right? Because even me with Matic, at one point I was like, I'm putting too much into Matic. Let me diversify, because if Matic goes down, and it has, right, a lot of my portfolio goes down, and now it is down, so it's dangerous. Rick, yeah, I'm making it. I got the bots out here. Rick, what are you doing right now? What do you feel about this crypto thing? I know you and your wife got into it, and you guys were really into it. Are you worried right now? Do you have diamond hands? I'm gonna teach you guys how to have diamond hands. Diamond hands means you can hold through all these crazy crashes, right? And that's what even Elon, who kind of set this off, said Tesla has diamond hands. What he meant is Tesla's not gonna sell. Who knows if he's not lying? He's lying or whatever. Who knows? But what they say triggered this fall is Elon saying the energy usage of Bitcoin is concerning, and they're going to stop accepting Bitcoin at Tesla. So as a technologist, as a person that works with investors, as a person that works in many different places, I cannot for the life of me believe he did not know the truth about how Bitcoin is mined before he bought Bitcoin and right now. For me, it felt like a calculated way of pushing the price down to scare people like us into selling so the rich people can come and buy more. Remember, you can't lose if you don't sell, right? Unless you believe this thing's going to go to zero, why would you sell when it's down? You should only be buying more if you have the opportunity to. But let's clear up the energy usage thing for Bitcoin, because I was on Clubhouse and a guy came in that's from some department in the UN for climate responsibility. And he said that his job is literally to figure out how much energy Bitcoin uses. What he said is, after years of study, Bitcoin is either carbon neutral or carbon negative. What he said is, it's built into the business model to find the cheapest renewable energy. Why is that? Because if you don't, you won't make money mining Bitcoin. So if you're a Bitcoin miner, you are looking for places where they do renewable energy, or they have energy that goes unused and you use that energy. So basically, he said there's no way Elon, as a company that is Tesla, who's looking at climate change, does not know that. And I was like, when I heard that, I was like, see, this is where we as regular people have to understand the way this whole market thing works, right? We are not meant to fully understand it, but I'm going to try to explain it to you now because I get to see it now. The way it works is rich people get rich by taking money from poor people. That's how they get rich. There's not new money being created except when they print money, right? But when they print money, they take it away from you, right? It's like, oh, what are you going to spend it on? The economy. How are you going to spend all this money, right? So what happens is they give us money and then they take it. They give us money and then they take it. So think about these waves. What are they? Give us money, we spend it, they bring it down, take it, buy more. Give us money, we put it in, scare the shit out of us, it falls, we sell, they buy, make more. That's the whole thing. Stock is like that. Crypto is like that. Real estate is like that. So if we understand that this is what's happening and start adjusting the way we react to these things, we will benefit from those ups. But what happens is most times, most people, the drops, they jump out and they lose money. And the rich people buy it up and make more money. And that happens in every industry. So this is where I'm trying to create this content to really educate and make people understand, like, what's happening right now is this called whales. These whales are doing this intentionally. When you see these charts, billions of dollars are being taken out in like time like this. That's not retail investors. Let's say there's 1 million of us and we each buy $1,000 of Bitcoin. That's not $100 billion, you know? These guys and girls that have a ton of money, they're pulling out, dropping the price, scaring us to taking it out and losing that money. And then when it gets to a certain point, they'll buy again. So don't come out and just keep that working. All right, so
Yeah, I can second that.
Go ahead, Milan. You can second that.
No, I was saying because we have, obviously we had our market cap at 181,000 at one point, and then we have one whale that single-handedly brought it all the way down to 3,000.
Yep. So see, Milan made a coin because he has a project that he really believes in. I know about it well. I'm trying to get him investment. He basically got screwed over by a rich person that came in, bought it, a lot of it, right? So I'll give you the example. I don't have the exact example of Milan's, but he just said it 180 and brought it down to 3. So that guy probably bought, let's say a person probably bought, like, let's say 150K worth of his coin. And then he let more people buy in that other 30K. Then he pulled out his 150, making whatever money on those 30K. And then it went down to nothing because people dropped out, right? And that's the process of how these people, it's messed up, but it's the way of the world. You have to understand the only way a rich person gets rich is to get money from more people, right? So 1,000 people give me $1, then I have $1,000 from 1,000 people. But if 1,000,000 people give me $100, now I'm rich, right? But the benefit of understanding that is you could do that, but in the right way. You don't have to do it like by jerking people. You can create products, you create courses, entertainment, whatever it is, and really have value by them giving you that money. But in the financial market, it's built on, and I didn't even know this until now. This is crazy, actually. And I'm gonna admit, on national global television and Clubhouse, I didn't know this till I started working at this. I'm a partner now in a publicly traded company, right? So, and I don't talk about it because there's SEC rules. I'm figuring out how to talk about it, but I don't know how to yet, so I don't. But I'm in this publicly traded company, and now I'm in meetings about the way the stock works and SEC works. And after one of the meetings, I had to talk to somebody and be like, wait a minute. So when people buy stock, that money doesn't go into the company. And basically what I found out, and this is probably how crypto works too, I need to really check. When you buy a stock, the only time the company makes actual money is the first time they put those shares out. So let's say I am company X and I say I'm going public. I'm putting 1,000,000 shares on the stock market at $10, whatever. People buy that. I get that money. After that, that money's just out in the market and people are trading on it. And whatever that happens over there on those trades, the company doesn't make any money. So it becomes its own life. Like this economy is outside of that company. It's not valued at anything that's happening with that company. That trading, those things don't happen. Some things the company does can make the value more and people want to trade it more, but it's not connected. Like that money doesn't go into the company. So think about that, right? So it's basically this area where people are just getting rich off other people. They're buying, tricking people to bring it down in value, buying it again, making a lot of money off people that don't really fully understand. And I was one of them too. I was lucky enough to be in these meetings. That's why I do this, because I am extremely lucky to be in the scenario where I can see a lot of pieces. And I'm like, it's messed up that most people don't know this. So I'll put it out there on everywhere and hopefully people watch and understand it. So any questions? All right. So crypto fire sale, get in while you can at these prices. Yeah. I mean, not financial advice, but I'm buying. And I think it could go lower though. There's some people that believe Bitcoin will go to 20K. If that happens, a lot of people are going to be screwed. A lot of people are going to feel like I got to jump out, and they're going to jump out because they're scared instead of looking at it as an investment. That's another reason I'm making this content. Hopefully people watching and thinking, all right, let me look at this as an investment. I'm not going to jump out because right now it's a little bit, it's lower than when I paid for it by a lot. Like I said, I know people buying it at 62,000. If it goes to 20,000, they're going to feel like they lost a lot of money, but they only lose money if they sell, because in a year or two, when it's 300, even 100, did they lose money? No, right? So that's how I see it. If you have Matic and you see it getting low and you buy some more, are you losing more money this way? No. All right. So the idea is you're adding to your position, right? So let's say you bought $500 of Matic when it was $1 and it goes to 50 cents and you buy another $500. Then you just bought 2 times the amount of Matic for the same price you bought at the first time. Why wouldn't you do that if you really believe in the project and you think about it as either a trade or a long-term investment? If you think about it as a gamble, you could do that too, because you can kind of be like, all right, if it was at 50 cents, if it was at $1 not too long ago and it's at 50 cents right now, it's probably going to go back to $1. So I'll buy it right now, double my money, and then I'll cash out. That's a gamble though, because maybe it doesn't, right? But with Matic, I do believe it will. Again, not financial advice. All right. The market should be heading back up in the next week or so. It's a great opportunity for small guy to get in and make some real gains. The sale price on crypto may never happen again. This is the thing that I worry about, right? Like, again, what Tony Robbins said, the people that make money are in at that one nice jump. And the people that don't make the money are the ones that are trying to time it and miss those once in a lifetime jumps. And he says they happen every now and then, and people get rich off of them. Most people are not even in the market when they happen because they're trying to time it. So that's where I'm looking at crypto and I'm saying, stay in the game. Don't try to time it. And crypto's the toughest one because it's 24/7. It's not like the market, like the stock market where it closes at 5 o'clock, weekends is closed. Crypto, I'm getting text messages at 4 o'clock in the morning, like, oh, Matic is 47% down. What are we gonna do? And I'm like, oh man, I'm gonna buy some more. Right. So BTC 25K by my analytics. See if BTC goes down to 25K, people are gonna be scared. People are gonna be scared. Like I know people that bought it 58, 62, 50, even 25. People bought it at 25 and it went up and they saw it go to 65. So they felt like they made all that money. And now it's back to where they started. So they're like, oh, I should just get out. This doesn't work for me. So this is a very interesting thing, though. I'm coaching multiple clients. And one of them, I had to really ask them, do you think this is the asset class for you, though? Because most people come from real estate, which is the safest. Of course, there's always bull that you got to deal with any type of investment or entrepreneur thing. But I was like, look, if you're not going to be able to sleep because you're looking at this, you might want to get out. But at least wait till you make the money back. It's going to come back. But maybe once you make it, take that gain and move it into real estate. And I'll tell you another thing. There's one guy, somebody asked me to speak to a group on Friday. And one guy, he had $1.5 million in Ethereum, right? What he did was he borrowed 500,000 of it to buy a property or a piece of land in Mexico. When it went down, his whole thing liquidated. So he lost $1.5 million worth of Ethereum, but he had a piece of land in Mexico. So think about the difference, right? If he would have bought more crypto, he would have lost everything, right? Or been down. He would have lost his 1.5 million, and the crypto he bought would be down right now too. Maybe that comes back up, but come back up to 1.5 million, he might have to wait a long time. But at least he has a piece of land. So the guy was like, of course he's devastated by thinking he had 1.5 million. Now he has nothing, but he has that land and he can make a lot of money off that land. So that makes me think in how I'm doing things too. Like you saw, if you guys been following my stuff, I'm doing real estate stuff too. And I'm thinking, all right, maybe what I do is next time this comes back up, instead of only taking loans to buy more crypto, I'll take loans to buy more property. Because that is the way of protecting and spreading out your risk, right? Maybe I'll take some of that loan, buy some stock. At one point, I was going to do that with Dogecoin because I bought Dogecoin in Robinhood, and you don't actually own the Dogecoin when you do that. So I was like, all right, I'm up a lot. Maybe I'll buy some stocks, right? But again, I just treat the Doge like it's done to me. It's dead to me. All right, the wild, wild west of the trading world. Yeah. This is the opportunity, not a bad thing for crypto. So yeah, I mean, I agree with Remo, man. Like, if you are just in thinking about it, man, you just got the gift of a lifetime because people thought it was out of here. Like there was no way to come back to this, and we just rewinded and put you right back there. If I told you 3 weeks ago, hey, you want to buy this for 50% of what it costs right now, you would jump on it. But now that it is 50%. You're like, I don't know what I should do right now. Again, that comes back to the gambling aspect of it. If you believe in what this does, what these things are going to do, you have the sale of a lifetime right now. So, any questions from anybody in the audience on Clubhouse? Hey, Vivica. Hey, I don't know. You guys are new to the space. If you want to come up, let me know. And anybody on YouTube, Instagram, let me see. Instagram is tough for me to keep following. All right.
Miguel,
go ahead.
Miguel, this is Arturo. This is the first time I just joined the group, and I think that it might be good to connect at some point because there's some things I'm working on that I think you might find interesting. But I guess how do you? I'm kind of new to, even though I've been following it for a while. How do you just differentiate between something that's just opportunistic momentum speculation versus something that is more of a real investment? Because I think that's part of the
Yep.
If we think it's momentum and speculation, then we're going to say, well, it's dropped 50%. It could drop to 20% for the next 2 years. Versus it really is. I really believe in this. It's Netflix, and it's just down for a little bit, but we know 2011 that it's going to keep going up.
So that's a great question. That's a great question. Go ahead, Milan. What do you think?
All right, so I would say the 3 rules, right? The first rule: look at the tokenomics, look at the team, look at what they're planning on doing with their token. Number 2, look at the amount of wallet addresses are holding that token. So if it's 1,000 and above, and you see a lot of people believing in that project, then you probably should too. And then 3, look at the transaction history. See how frequent their trades are being traded, right? See how many people are selling, how many people are buying. If people are holding longer, it seems like people are believing in the project and not looking at it for a quick capital gain.
That's right. So that's what I said before about crypto being different than most other asset classes. Is a lot of this information is public. You can see the stuff happening. Of course, it could be created and not be genuine, but the way I do it is the same way I do when people pay me to analyze startups for investing, right? And this is how we do it, how I do it. First thing I look at is the team. So some of these projects, they won't have a public team. So that's a little scary to me. If I can't see the team, look them up on LinkedIn, see the background of the person, I'm not as sure it's an investment. I look at those more as maybe this is a little bit of more of a gamble of a trade, right? So first thing is team in any investment. Any investment you're going to make in a stock, in an early stage startup, in crypto. Look at the team. Do you believe this team? Because a lot of this stuff is all the team. Problem and vision. All right, so that's the next thing I look at. I say, okay, what is the problem that this company is trying to solve, and what's their vision for solving it, right? So do I believe this is the way that problem is going to get solved, or do I believe it's possible that they got it right? That's a big thing for me, right? So when I looked at Matic, for instance, this is why when I came at Matic, I went and I dug in and I said, okay, first thing, team. I looked at the team. They built out, they came out of India. All the guys had ridiculous resumes. You can find them on LinkedIn. I was like, okay, public team. You can look into them. They're on Twitter. They're active. They got a Discord. You can literally talk to them. I was like, all right, that's cool. That's a very good sign. Second thing, problem and vision. Their problem they were solving was Ethereum's gas fees were too high, and a lot of not as rich people weren't able to use decentralized finance and do NFTs because Ethereum price was so high. So they created a layer 2 to help fix that gas fee problem. And I was like, oh my God, that's a huge problem to solve. And if they solve it right, they're going to win. They're going to make a lot because they're the first kind of to market with it. And then their vision for solving it was to become the internet of blockchains. And that idea, I won't go deep into it, but it's genius in my opinion. So I said, all right, I can see that. It was only 30 cents. I said, you know what? I'll risk. The value proposition is a big one too, right? Like, so, okay, what is the value to using it? I just told you the gas fee. I was literally on the day of the crash on this week sometime, I was trying to make transactions. It was going to cost me $600 a transaction, and I had to pay it or I was going to lose money. So I paid the $600, and I'm like, oh, on Matic, this wouldn't even cost me 1 cent. But because I was on the Ethereum network when I needed to make this transaction, I had to pay the $600. That's a value proposition that everybody who uses Matic is going to see instantly, and that's why it's been growing like it's growing. I'm not done. This is what I mean. You got to do your own research, do your own homework. I'm not even halfway through all the things I look at, right? Then I look at the product. How does it work? How good is it? How easy is it to use? And I do it myself. I deal with it. I use Matic every day. So I knew this thing is going to take off. Market. What's the market? This is cryptocurrency. Every single person in the world is part of the market. 7 billion people. If 7 billion people are using Matic, the value of Matic is going to grow up. And I'm not saying that's going to happen, but cryptocurrency, I truly believe 7 billion people in the world will be using cryptocurrency in the next 100 years. So that's why I say we're early, because less than 5% of the global population owns any cryptocurrency. So that's freaking early, right? All right. Then I look at the business model. Their business model is they're built on top of Ethereum. Ethereum's the number one used thing, and they solve a key problem and they help Ethereum make more money. So Ethereum is happy with it. And actually the CEO of Ethereum said the future of Ethereum, well, I don't know if he's a CEO, but whatever. The creator of Ethereum said the future of Ethereum is going to be built on layer 2 solutions, which is what Matic is. This is why I looked at Matic early and I said, whoa. Then scale. How big can it scale? I just told you. Ethereum, most people don't even know Matic exists. Ethereum is being used crazy, and all of these platforms are switching to make a Matic version, a Polygon version of their system so people could use Matic. So I'm looking at all these things and I'm like, whoa, this is a huge opportunity. But think about what I just said. Are you doing that with Shiba? Are you doing that with Doge? Right? Most likely not. So you're gambling. If you're not looking at it and really trying to understand, and this is what I mean about the homework. I really wish I knew about this stuff when I first saw Bitcoin. I didn't do that. Right? Bitcoin has a big hole that a lot of people are scared about. The team. Nobody even knows who invented Bitcoin. The guys or girls teams is anonymous, but they had to do that. If you look at what Bitcoin is doing, if they would have been public, governments would have probably came after them pretty hard. So they had to be anonymous for it to get this far. And but again, it's open source. So people contribute to it all around the world, and it's not a centralized thing. So that's another benefit to it. So I hope I answered your question, because it's not an easy question to answer, because you got to kind of understand this stuff. Like as an investor, right? You got to think about it like, this is what venture capitalists do. When they're about to put $1 million into a company, they look at this and they say, okay, do I believe in this team? Do I believe the problem they're solving? Do I believe the vision for solving it that they have? Do I believe that their product is at a place where it can handle what they're saying they're going to do? No? All right, so I'm willing to invest, but I'm going to invest less and I'm going to see where they get. So that's what you should do too. It's called dollar cost averaging. If you see a project, you kind of believe in it, throw a few bucks in and keep watching it, and then put more and put more and put more. That's what I've done with Matic. That's what I do with Bitcoin and Ethereum. And then these other coins, I do it too, but I borrow off of my main ones to do that, because I'm not going to risk my main assets. That help? Did that answer your question?
Yeah, that does. So based on what you're saying, in a sense, you can identify which projects are maybe undervalued in a sense. And I guess, what does that mean in terms of Coinbase itself, like as a stock?
So with Coinbase, I look at it the same way, right? Coinbase has a good team. It had a good team. The founder, he left now, is a freaking genius. Like if you look that guy up and hear him talk, it's crazy the stuff that comes out that guy's mouth. He's a genius, right? But again, now they have a different team, but they're public, so they already made it pretty much. But as a growth company, I look at it and I thought, okay, they're the first to market publicly traded exchange, but they're centralized, right? So, okay, that means good and bad. That means good because the government is going to allow certain things that it wouldn't allow to others or at other times. But one thing I just heard is now the banks are going to try to figure out how to let you buy Bitcoin and Ethereum straight out of your bank account and not have to go into Coinbase. If that happens, that's going to do some damage to Coinbase, right? Like if you think about that, right? If you say, all right, right now I got to go pay fees to Coinbase. So what's happening right now, and I'll tell you, this happened to me. This happens to a lot of my clients and a lot of people I advise. The banks are slowing down how much money you can put into crypto. They're slowing down how much money you can send into these apps because they know this is coming. They're going to, why would you have cash sitting in a bank when Coinbase gives you 15 times more interest just for having the cash in Coinbase? And this is why I believe the come up is going to happen. I was looking into something and I found out that right now sitting on exchanges is more USDC and Tether, these stable coins. There's more stable coins sitting in exchanges than ever before by a lot. So what that means is everybody's sitting on that USDC and stablecoin waiting for the perfect time to jump back in. So they're all just sitting waiting to see how low it can go, and then they're going to throw all that money back into the marketplace, and it's all going to, they're not just going to sit and put that have that USDC coin or Tether or DAI in there and not do anything with it, just collect 15% interest. If you believe in Bitcoin and Ethereum and Matic and stuff like that, you're going to do that, right? So when that happens, that's a whole nother ball game, but that's literally something you could check on. You can look it up. There's more stable coins sitting on exchanges than in the history of cryptocurrency by a lot. So what do you think people are going to do with that? They're going to buy more coins eventually. So that's what I think is going to happen. When it's going to happen, who knows? All right. So if you ever wonder what free markets and true capitalism look like, look at what government is trying to manipulate, inferior, or control it. That's what crypto is. So what I think you're trying to say, Remo, is yes, capitalism is what makes America great. But when I look at capitalism, it basically is, capitalism means rich people have to figure out how to extract as much money from poor people. I got to visit a place called Mondragon, Spain, which is a socialist country. I'm not socialist, whatever. I know AOC, so people are going to think I'm socialist. But MIT, I'm an innovation consultant. MIT sent me to Mondragon, Spain to figure out how they do that and bring it back to the Bronx. When I sat with the head of Mondragon and the whole group, and they explain what they do, which is, wait till you hear this, most people don't even know this exists, it's crazy. They have a company, the town is called Mondragon, Spain. You can look it up, MON Dragon, that's how you spell it. Look it up, Mondragon, Spain, cooperative. What it is the whole town, they are employees of multiple companies in the town, but they're not just employees. They're partners, they get voting rights, they share in profits. They pretty much, all their health insurance and all this stuff is covered by the companies. What's better about it is there's an overarching company that helps every single company stay alive throughout turmoil. So what does that mean? Let's say right now in a down economy, one industry is suffering. The top company, which is all, is created that way, they'll say, all right, this company is struggling. Let's take some of their employees and put them in this company because this company is thriving and needs more help anyway. Or let's build up our education so we could retrain people for the next job that they're going to need. This all happens in a town of like 150,000 people. You can eat off the floor in the place. No, there's no homeless. It's amazing, and the world doesn't even know it exists, right? But it's socialist, so people don't want to hear about it. But when I saw that, and I was like, man, how can we do that in America in some way? I'm not saying it has to be the exact way because I don't see America going that far with it. But when you see the difference, it's kind of scary, man. And then you see where technology is going, right? I've been having this conversation with people in this room, people watching. Things are getting automated faster and faster and faster. What's going to happen when there's very little jobs? If you don't invest in these companies that are automating the jobs away, where are you going to get your money from? This is why I create the content I'm creating right now. I really want to make sure people understand innovation, invest in it now while you have money to invest in it, because what happens if your job gets automated away? I had conversations with like 4 people this weekend where they were telling me, I think my job is going to be automated in 5 to 10 years. My job, I already see the writing on the wall. And I'm like, man, that's a sucky place to be. But what you can do right now is while you're making money, look at whatever automations are coming in your industry and invest in them. Because if they end up taking your job, at least you'll be making money from that investment. Because there's going to be less and less and less jobs, more people going after the same jobs. I really don't know what happens when that happens. So my thing is right now, innovation is where money's coming from, right? Decentralized finance is an innovation that allows us to make more money faster with our own money. We need to do that right away. We need to understand this right now because when the automation comes, and look, the other day I went into my bank And there was a black guy he's my friend. When I go in there, I talk to him. We talk about sports and all that. I was like, look, go search decentralized finance, because the bank was trying to stop me from doing what I was doing with crypto. They didn't let me put money in. And I'm like, so I went, I'm like, why are they stopping me from using my money? He's like, look, dude, there's laws, that you lucky that you know who you know, but they're not letting people do this. And I'm like, why? He's like, I don't know. And I'm like, you know why? And I pulled it up. Decentralized finance. Look at this. I was like, this is going to take your job. If you don't understand this, there's going to be less tellers, less people working at banks because of this. So understand it right now, and you will be in a better position. Right? So that's the same with anybody. If you right now can look at the job you do and say, a robot can do this, you better believe a robot will be doing it. So why I say everybody has to be an entrepreneur or an investor, entrepreneur-investor connection, because you may not have a choice. Like right now, everybody's looking for jobs. But then there's people saying nobody wants jobs. There's a bunch of jobs nobody wants. So right now, I heard an article. Restaurants are struggling to find employees. One restaurant bought robots. This happened in New York already. They bought robots, $10,000 each, $10,000 for the robot. Think about that. If you're a person, can you live off $10,000 a year? And this is $10,000 one time. I'm not saying they got to pay $10,000 a year. They pay $10,000 one time for the robot. How do you compete with that, right? And okay, let's say you knew about that robot company and you invested in it. At least you have something versus nothing. That's why I'm trying to make sure people understand all this stuff. It's very important, and you're going to kick yourself if you don't. I kicked myself for not doing the homework when Bitcoin was 30 cents. I'll be filthy rich, and I probably wouldn't be making any of this content. Hopefully I would have, but I probably wouldn't. So yeah, man, I really just hope this content is helping people and it's making people think, evaluate where they are. Every industry, literally, I go in meetings every week. At least 3 companies a week are pitching the company I work with. Every single one is automating a process, an industry, and I see it and I'm like, man, they're going to raise so much money and they're going to eliminate so many jobs. Why? Investors make a lot more money if there's less people to pay, right? Think about it if you were an investor. Company A has 1,000 employees with that overhead doing this. Company B has 100 employees with that overhead doing the same thing. Which company makes more money? Right? So of course you're going to invest in the one that is trying to figure out how to have less people do more to make more. That's where I'm saying the capitalist mindset is putting us in a position where jobs, it actually is not a positive thing that a company is creating more jobs because you make less money, right? The investor makes less money if it has to pay more people. So if you look at the Amazons of the world, why is Amazon able to charge less than everybody else? Because they have robots in the factory. They're not paying. Every single person that works on Amazon is not a person. They have robots. If you look at the Amazon factory, it's run by robots. Thousands of jobs. And of course they could charge less than mom and pop that has to pay full price for whatever product, when Amazon is able to charge less because they have to pay less people. This keeps happening. So if you're not investing, if you're not looking at what's in the future, you're not looking at innovation and saying, okay, what's the next thing? How can I make sure I'm in it? Not gamble, invest. Because in 10 years, maybe your job is different. Hopefully what happens is society changes in a way where we are a little bit more understanding of that. And I look at things like universal basic income, and not to make this too much about that, but I don't see a way around it. Right this second, sitting where I sit, there's too many people looking for jobs. There's not enough jobs for all these people. There's not, unless you're in tech. And even that, I could already see companies that are going to automate development. software, maintenance, security. You already see them. You could already see them. And it's like sending our kids to learn that stuff right now. 10 years, they may not be that same job, right? So it's a scary thing. I don't want to be too much of a Debbie Downer, but I am looking at these companies and I'm saying, okay, if this solves a problem, what problem does it solve? If I can invest in it now as a low market cap, cool, let's do it. And hopefully one day it's 1,000 times the money. And if I put $100, now it's $100,000, right? Like that's cool. If I put 1,000 million, right? If it's 1,000x, that goes from 1,000 to 1,000,000. That's a little bit of a gamble, but if you think about it in the long term, it's an investment. If I got to hold this for 10, 20 years for that to happen, cool. That's what I'll do, right? So hopefully I answered everybody's questions. I gave you guys some value. If anybody has any questions, I live in a communist country. Canada is gone full commie. The only thing they haven't done here is start shooting us in the streets. Wow. All right. So if you ever wonder that what free markets, yeah. So anybody from Clubhouse, any comments on Clubhouse, any questions anywhere? I really hope. I know I started this for the crypto and I took it to a different place in the woods. I put us in the woods, but I really think you have to understand this stuff because as a person that gets to sit where I sit, I literally work with hundreds of students in the South Bronx. I work with startups in normal stock, high growth technology, early stage startups. And now I'm looking at crypto and I do real estate stuff. And I look at all of this and I see a pattern that's scary. And if you're not investing in all those asset classes with the money you have right now, while you're still able to earn it, and we just saw what happened last year, a full year was very hard to earn the way people were used to earning because you couldn't go out, couldn't do this, couldn't do that. Some people got made money. Who was it? People that had money already and were able to invest. And people that had scenarios where they took advantage of innovation. They were ready for this. They were online creating content, creating courses. When most people thought, oh, you can only do courses face to face, people went online. They were set up for this situation. They benefited. The people that weren't set up for the innovation time, innovation economy, they suffered. So if you're looking at your industry and you're not thinking, how can I innovate in this industry? You're going to suffer most likely. And that's if you're just looking for a job, you need to make sure you're looking for a job that you don't think is going to go away. Like a friend of mine was just telling me last night, he was talking to the cab driver in his Uber. And he was telling him, the Uber driver was like, hey, I'm looking for another job. And he was telling me, he was thinking about what I was telling him. This guy's job is gone already. The Uber driver's gone. The job is gone. They're already making driverless cars. It's going to be available no time. You can't go into driving a cab right now and think your job is going to be there in 10 years. 99% chance it won't be. They're already doing it. Tesla's already on the road. There's truck drivers. There's already trucks driving on the road without people. Like, what happens to all those truck drivers, right? So again, that's part of why I'm doing this. I want you guys to be in that mindset. All right, my job might go away in 5 to 10 years. How can I stack assets as much as possible that can give me income or grow in value? So if I need money, I could sell them. That is not keeping cash in any bank. That's not buying things you don't really need to look good or make people think you're more richer than you are. It's going to be investing in things that you understand, you believe are not gambles. Because most of those things, I heard a story this morning actually on Clubhouse. There was a guy, he invested $100,000, 10,000 in 10 different coins. 9 out of those 10 coins went to nothing. 1 made him $1 million. Guess which one that was though? Dogecoin. So he gambled though, but that's not very different than venture capitalists. I deal with venture capitalists. They do the same exact thing. They invest in 100 companies and 2 or 3 make them billions. Same idea. So when you look at it, they're diversifying their risk, but they're gambling. When you invest in early stage companies, It's a gamble / investment. Because when you invest as a venture capital, you put your money down, you don't expect to see a return for 7 to 10 years. So when you just saw Nas made all that money from Coinbase, he invested in that 7 to 10 years ago. It's not like he gave him that money and then next month he made $400 million. No, that's not how it works. And they don't tell you all the companies Nas invested in that went to zero. I'll tell you another story. This is probably one of my last ones. I get to talk to angel investors, venture capitalists. I'm a lucky person for that. I get to ask the crazy questions most people don't ask. So I met a Hispanic angel investor, filthy rich, and I asked him, all right, what was the worst deal you ever did? He was like, one of my first. He was like, when I first made all my money, I saw this one company and I thought, oh my God, this is amazing opportunity. I put $1 million into the company. Within 6 months, the company was out of business. And I was like, oh, that must hurt. He was like, it haunts me to this day. And I'm well past it. He has many exits. Actually, the week I met him, he had a ridiculous exit. So he was even richer. But he's still thinking about that $1 million gamble that he thought was an investment. Right? He said, I messed up. I didn't look as deep as I needed to look before I put $1 million into that company. And now I'll never do it again, right? So we're learning right now. We just learned. If you lost money, if you gambled on Shiba and now it's super down, you learn, but you got to learn, or you're gonna keep repeating the same problem. So I think I'm gonna end it here, unless there's any more questions from anybody in the Clubhouse. Any questions? Anybody on IG, YouTube, Facebook, Twitter, Twitch, LinkedIn? Yeah, I think that's all of them. Anything?
Do you invest in startups yourself?
Personally, I do when it comes to equity crowdfunding, because I'm not a accredited investor yet. So I can't technically do it, but I have partners that I work with that can do it, and I do it through them. But me personally, I can't as an unaccredited person. Unaccredited means I'm not worth more than $1 million outside of my home, right? So that's or I don't make more than I think it's 300,000 a year. Yeah. You have to pretty much be a 1%er to be able to invest directly into startups officially, but you can through equity crowdfunding, and I do that.
200,000 a year for 2 years.
Oh yeah, for 2 years though. See, so that's the thing. It can't just be 1 year.
But they don't really care. I mean, they do. They say it, but it's anyway.
So what I do it in a different way. I do it through services and coaching. I'll take equity for stuff like that. But not putting in money, because the paperwork sometimes is not even worth the money I'm willing to put in. So not yet, but I will be one day. Why? Why do you ask that?
No, I mean, I'm involved with more than one startup, and one of them is more beverage angle, and the other one has more to do with local communities. And there's a place for local cryptocurrency.
So yeah, I'm always up for hearing what companies are doing, because like I said, I have a lot of connections within all these spaces. If you match with a type of investor, because there's another thing investors do actually, they stick to industries they understand, right? So because again, when they're doing this due diligence of understanding what to invest in, if you tell me, hey, I have a private jet company that is revolutionizing private jets, and I don't know about private jets, how could I really do due diligence? I will have to ask somebody that does. So there's certain investors that they just stick to what they know. So what I do is I'll understand what the company does, and then I think, all right, okay, this investor invest in that. I could connect you with that. But then I also work with equity crowdfunding. So if you want to, because what I believe is equity crowdfunding allows people like me and you to invest in companies early, the same way we're doing with cryptocurrency, but with companies that may actually help our community or solve a problem that you currently have. JC, good stuff, Miguel. Thanks, John. Thank you. So yeah, I mean, definitely let's connect. I'm sure I can help in some way. I can connect you to somebody that is in your industry, or if you want to do equity crowdfunding, I can help even more. And
I do actually.
Oh, you do? So definitely reach out to me. I'll connect you with, and we'll meet about that, because I'm actually working with a company where we're trying to help equity crowdfunding startups.
How do I connect with you? LinkedIn?
You could do LinkedIn. On here, my Instagram and Twitter are connected on the Clubhouse. But if you search on LinkedIn, I believe it's you search my name is very common, Miguel Sanchez. But if you search M Sanchez World on LinkedIn, I believe you will find me.
Okay. On a really dumb note, how do I DM on Clubhouse?
You can't. So DMs are not available on Clubhouse. That's why they make you connect your Instagram and Twitter. Everybody goes on Instagram and Twitter to DM. Vivica, any questions on your side?
I don't have a question, but I did want to make a comment about the credit
You're
situation.
a little low. I can barely hear you.
Better?
No, but all right, I'll try to hear it. Go ahead, say it.
All right. So accredited investors, one of the reasons I think DeFi is going to explode for crypto is because of that same, that actual reason right there. You have to be rich in order to get the ability to invest in other things that the common person can't invest in. So DeFi is going to change the game as far as crypto goes, and it's going to hurt the banks a lot, and that's why they're freaking out.
I 1000% agree. That's why I'm talking about crypto. What she just said, if you couldn't hear it, she said DeFi allows you to invest in early stage companies without the accredited investor title. And what she means by that is, okay, I'm going to give you an example, a real world example of what actually I don't know your real name, said on Clubhouse. He said he has a startup, a beverage startup, and I know Milan has one too. He has a startup. If he wants to raise money, his valuation of his company would be in the low millions early on, right? When you first start a company, it's in the low millions. And then one day, if it works, it's in the billions. So if you invested in a company that goes from 1 million value to $1 billion, you make a lot of money. But what happens right now is in the stock market, you can't invest in a company that's worth $1 million, $10 million. You can only invest in companies that are worth billions of dollars, right? So the jump in value and your gain is not going to be as much. So what's better is more risky, but it's better is to invest earlier in the stage of a company, right? So, but you're not allowed to unless you're a accredited investor. So there's two things that are happening right now that change that. And that's why, again, I call this entrepreneurs and investors on Clubhouse. Everything you see, I'm saying everybody's an entrepreneur, everybody's an investor. I just told you why. Basically, if you want to invest in an early stage company now, they have a new law called equity crowdfunding. It's called the Jobs Act. It basically allows anyone that if you put in a company under this act to raise money, and is controlled by the SEC because they protect people, you can raise up to I think it's now $5 million at first, and it goes all the way up to like $250 million from regular people. So you, everybody can invest $500, $100, and invest in this company when it's worth very little. And then as it grows in value, you may want to sell that stake and make your money. That's available now. It just happened like a few years ago. And then there's decentralized finance, what she just said. Decentralized finance is what we're doing when we invest in Dogecoin, we invest in Matic. We're investing. When I started investing in Matic, the market cap was not even $1 billion yet. And now it's at 6 billion. I think the last time I checked, I haven't checked in a while. It could all be down. But think about that, right? That's how you gain in value in your investment. You have to, the earlier you are, the more money you make. The further along you are, the less gain you make. And right now, the real only way most people know they can invest is in the stock market. But when you invest in Coinbase went to the public market valued at $500 billion. Think about that. For you to make double your money, Coinbase will have to become $1 trillion company. Who knows if that's going to happen, right? I mean, how likely is that? Who knows? But if you invested in Matic, you already doubled your money, right? If you invested it when I first said it, when it was 30 cents, you already doubled your money, right? That's a very big difference. But again, there's not a lot of Matics. You really got to do your homework. Even Matic is maybe a once in a generation. You find that you caught it. I caught it and I put enough in it to understand this is valuable. This could be valuable one day. and I advised a lot of my clients to do it, and they're very happy with me for doing that. But I advised you too. I told everybody, but again, it's not financial advice. You got to do the homework, right? Bitcoin, Ethereum is going to be another one. One day you're going to look back. Ethereum's going to be worth $100,000 a coin, and you're going to be like, I could have bought it when it was $2,100 and I didn't do it. What an idiot. Bitcoin's going to be worth $1 million a coin. And you're going to be like, oh, it was 38,000 and I thought it was too much. This is what the risk you take too, right? Fine. You don't understand it. That's up to you. But when you look back at it, you can't say nobody told you to look into it, because I just did. So thank you for everybody coming by. Nice meeting you, Vivica. Nice meeting you, A. Milan. Thanks for all this, always. Go ahead.
Thank you. This is Arturo. I sent you a connection request.
Awesome. I'll respond in there. And thanks for everybody on the IG, on the Twitter, on the Twitch, Facebook, YouTube, LinkedIn. Thank you guys for coming by. Oh, and also this will be a podcast, so check out my podcast as well. Thank you guys. Happy Sunday. Spend some time outside. Go ahead.
Are you still investing in NFTs?
Not as heavily. Okay, this is a good point. I'm not investing in NFTs right now because I think it's more valuable to invest in the currency. And what I'm going to do from now on is whenever I invest in an NFT, I'm going to borrow the money from myself to buy the NFT instead of using the actual currency for the NFT. Because
what do you mean?
All right, so let's say I did this already, and it's going to be a painful thing to talk about. But you know what? Whatever. I bought an NFT for 0.5 Ethereum when Ethereum was $1,400, right? Ethereum went to $4,000, so I paid $2,000 for this NFT. If you think about it, when it went there, what if Ethereum goes to $100,000? Then I paid $50,000 for this NFT, right? So what I'm thinking is, instead of paying $50,000 one day because Ethereum is going to go up in value, I'm going to borrow off of my crypto. Let's say that I go back and I'm going to pay that again. I would borrow the $700, buy the NFT, and now I only paid $700 plus interest instead of paying 0.5 ETH. And then in 10 years, that 0.5 ETH is worth $50,000. Get it?
Yeah, that makes sense. But why did you lose money if you buy a 0.5 and it's at, like you said, 2,000? That's like $1,000 now, and it goes up to $100,000. Doesn't that mean you just gain in value?
Not if people don't believe, right? If you don't believe that it's worth 0.5 when it's $50,000, and that,
I get what you're saying,
right? So
if the artist doesn't get more clout, and let's say he's selling less, it still may stay at that $1,000 price tag. I get what you're saying.
Yeah, like right now, people are offering me $200, $300 for that NFT, and I'm like, I paid $700 for it back then. Right now, it's 0.5, so that's still $1,500 or whatever it is, maybe $1,000. Why would I sell it to you for $300 right now, right? And I could see that continuing as ETH grows in value, right? So to me, it doesn't make sense to buy an NFT with your own asset. It makes sense to buy it with a loaned asset from your assets, if that makes sense. Any other questions? Fresh, you got a question?
Yeah, Miguel, doesn't it actually just make sense since the dollar, the actual US dollar, has depreciated like 96% since it first started? Don't buy shit with crypto because that.
Yeah, exactly. That's exactly right.
Just pay with USD.
USDC, yep. And that's what I'm saying. Pretty much, I take out a loan as USDC. So let's say right now this NFT, they want $500 for it. I'll take out a loan from my Bitcoin, Ethereum, Matic, whatever, for 500 USD. Then I'll convert that USD into Ethereum and I buy the NFT, but I only spent $500, right? So now I'll pay back that loan and I only got to pay $500 plus a little bit of interest. But if I just gave them Ethereum, my Ethereum, that means one day I could have given them a lot more money than I had to at that specific moment. So this is the big thing. She brought up a good point. What Fresh just said is right. The value of a dollar goes down every single year, day, whatever, however you want to look at it. you got to pull your money out of cash as fast as possible. That's what rich people do.
The dollar is like driving a fucking car off the lot.
Yeah,
that's it. That's what it's been. Like, you just keep driving that dollar, and that's what's gonna happen. But I feel like looking at it's almost like don't look back at it, because you're looking back at that purchase you made using the half ETH token. So you used half an ETH, right, to purchase what did you say? Some NFT, right?
NFT, yep.
But like, why do you want to look back at it? Because you claimed a value to it. You used that coin that had the value at the time.
I'll tell you why. Because when you buy,
that's a strange
You're
mentality.
right. And people have told me this, but I'm gonna tell you why, right? I'm gonna tell you why. And it's just, I guess you gotta understand how you're gonna think about things when you, especially money, right? That's why, like, I literally told a client this week, I don't know if this is the right thing for you, because if you're gonna be miserable, then get out, right? So with this piece of art, I thought I was buying something that would be more valuable later, right? So as I have it, and I'm thinking, I don't know if it's going to be more valuable later. I didn't buy it because I love the art. I bought it because I thought it'd be more valuable. That's just the truth, right? So now if I look and I say, okay, will it be worth more than me having that Ethereum later? If I'd never bought that art, I would still have that Ethereum. That's why, right? Because that is a different way to think, but it's how I'm going to think. If I look back 20 years from now and I'm like, Ethereum is worth $1 million, and I freaking bought this piece of art that I don't really even love like that. And nobody wants to even give me $500 for it. That's going to sting. So I'd rather borrow the 500 next time and pay 500.
You can use DAI, right? You don't have to necessarily use Ethereum. You can, on OpenSea, you can use DAI instead.
Yeah, exactly. But when I first did it, I did Ethereum. So now I'm going to borrow and buy it off myself with stablecoin. And as it grows in value, to me, in my mind, I will think of it as I only spent that much money.
Well, one, I hope the artist that you bought the stuff didn't hear what you just
said. It's anonymous. I got anonymous wallets. That's awesome about crypto. That's what's awesome about crypto.
The second thing that's really funny about it is that, like, the story about the guy who used Bitcoin, like the value of $15 of Bitcoin to buy pizza.
Right? And now that Bitcoin will be worth hundreds of millions of dollars.
No,
exactly.
But like, the thing is, he didn't buy the pizza thinking that the pizza would have more value later, you know, where you bought the art thinking that it might have more value. So I love your thinking, because if nothing else, it helps to understand this new world of crypto, like, and also investing. A lot of us here have not been afforded the opportunity to be in on some of the bigger deals that have happened and benefit from that. Yep. So this is like ground floor for a lot of people.
That's why I'm talking like I'm talking today, because what she just said is true. We were out of this game. We couldn't be in this game, but now we're coming in this game with the wrong mentality. We're coming in the game with a gambler's mentality instead of an investor or even trader. You might be thinking more like a trader and a gambler than an investor. If you start thinking like an investor, we are in an amazing early time to make a lot of money, but we got to be thinking that way, not like gamblers. Anybody else? Any other questions? What up, Hob? What up, what up, Edgley? Yeah.
Gas fee is still high, or what's Ethereum looking like?
So I haven't looked today, but like I said, when all the crypto's crashing, the gas fee gets insane. So that's another problem, right? Like, imagine trying to trade a coin because you feel like you made enough money and the gas fee costs more than the coin. Yeah, you know, so it's like, you know, it was pretty high. Like that day, it was like $600 to make one transaction, like I said. But then like a few days later, it went down and I moved all my stuff off Ethereum onto Matic. And now when shit is crashing, I'm more than good because I can move like no problem.
Are you doing liquidity pools, or you still didn't do that yet?
I took my stuff out of some liquidity pools. I was doing liquidity pool. I actually made a lot of money on one liquidity pool, but I took it out and I put it in Matic because Matic was going super low because I felt like I was gonna make more money there. But that's some trader stuff. But this is I'm talking about. Like I'm deep in the matrix, trading, kind of gambling sometimes. and
Miguel,
yeah.
Isn't the next step of, like, let's say the newbies, right? And I mean newbies like to crypto who are like, hey, they finally got they're off of Robinhood because they realize that that's not where they should be. They're on Coinbase. The next step for, I think, those people is to start to learn how to get interest and stake their money somewhere where there's a APY, there's money on top of their investment.
So
instead of just like USDC or getting a MetaMask wallet, like getting all that set up. I think
so Fresh is like more advanced than most of you because she's been part of the cracking crypto club that we run. But what she's talking about is one of the real big reasons I'm talking about this too. It's called yield farming. Not a great name, but what it really is basically, when you put your money in a bank, they give you 0.01 interest or whatever, 0.02. On crypto, because they've automated the banking process and they don't need people, they can give you more % interest on your money because they're paying a lot less overhead. They don't have to pay people. They don't have to pay office space. They don't have to pay retail locations. Again, automating people out of jobs, right? Well, I came back to, but because they have that advantage, they could give you 15%, 20%, sometimes 40% interest on your money. So there's things I'm doing, and I show my clients and my cracking crypto club people, you could put that money in places and just sit there and make either dollars, USDC, or make coins. So check this out. And I had this conversation yesterday with one of the coaching clients I have. He wanted USD. He's like, I'd rather have my interest in USD. And I'm like, that's like having your interest in dollars, and it's gonna go down in value though. And there was another opportunity to get interest in Matic, right? So imagine being able to get 20% interest in USDC, which is like $1, or 20% interest in Matic. Here's the difference. USDC is $1. So you're getting 20% of dollars, which is going down in value. Matic, you're getting 20% in Matic. Matic is going to go up in value. Which one would you rather have? I told him, and it was a little bit of a battle because I'm like, wait a minute, isn't your goal to make money? Oh, yeah, but it's not as safe. And I'm like, so wait, you believe it's safer to own $1 than Matic? Okay. And the more he thought about it, he was like, you know what? You're right. If Matic goes up 3x, that's like I made $3 versus $1. So what these sites do is they give you interest in specific coins. You choose which coin and which website will show you which coin you're going to get. But you have to understand all these different things. You have to have a wallet. You have to do it's matrix level stuff. You'll get there, but this is what I'm telling you. You're going to kick yourself if you don't start understanding this right now because it's so volatile. This is why they're giving these ridiculous interest rates because they want people to do it now. And you can make a lot of money. There was one, no joke, in a week, I made $500 from just having money in a place on a website. They gave me $500 for free just because I had money on a website.
And right? Also, Miguel, the big benefit to that too is realizing that we can actually keep this crypto market more stable by being vested in it and saying that we're in it and we're not gonna, jump and bail and
not be the fucking whale food, right? That's what's happening. These whales meaning people that have millions and billions of dollars of currency, they are controlling this to make us take our money out and then they can buy it for cheaper, right? So the idea of what she's saying is right. If we all, as millions and billions of people, just kept our money in, they wouldn't do this. But they know they can scare the shit out of us to get out, and they're gonna win because they know we can't handle that loss mentally like they can because they know they can come back from it. Well, if you think your life savings is gonna go to zero, you might take it out, say, well, I'd rather stay with 1,000 than nothing. But if you really believe in it and we all hold strong, it will never go that low. It will never go that low, because if we all, that's the beauty of what Bitcoin is doing, these cryptos are doing. We keep our money in, there's no last man standing. And right now what they're doing is they're making you worry that you're going to be the last man or woman standing in that coin. So you're going to bail. But if you really believe in it, you'll stay pat, and it will keep its value. So that's very good. That's a good point.
Yeah, I think a lot of new projects need validators, right? So people that stake their coins, you're going to see a lot of projects that need that. So if you're smart, I would look for any project that's asking to be a validator, and you just get a certain amount of coins and just stake your coins on their website.
So that's exactly what I did. I did that. What he just said, I became a validator of a specific project. I won't talk about the project because I bailed from it because I felt like it was going to keep going down and I made enough money. So I said, I'm out. That's a trader thing, but I could be wrong. That app could go way crazy, and I could have made way more money. But I said, you know what? I made enough. The market's going down. I'd rather take my money and buy other things that may make more money than that. But you're right. That's what I did. I went into a project. They wanted coins staked. Because I did that, they were willing to give me a lot of free coins every day. And those coins were worth $10 a coin. At one point, those coins were worth $50 a coin. So I said, you know what? All right, I just made money. Let me bail and be cool and be done with it. So any other questions? I know this has been a long one. I thank everybody for coming through wherever you're watching or listening. Any questions from you, Moody, Vanice? Say Vanice. Any questions from you guys or anybody in the IG, YouTube?
Miguel, I just want to say to any of the new Jacks or the new Jills that are listening, they can just go on Coinbase and just like they would normally have a savings account at any bank, Chase, Bank of America, Wells Fargo, whatever, or a credit union, just go into USDC. Look at that like a savings account. Put something minimal just to watch what it does, and then Google the crypto calculator for USDC, and then match it against what you make at your bank. And that alone is a fucking upswing.
Yeah, 15 times. 15 times. So by keeping your cash in Coinbase as USDC, they give you 0.15% interest. Most banks give 0.1, right? So just by having your money there, there's two valuable things to that. If you ever want to get into a coin, you're right there. You can do it easy. Two, you're getting way more interest on your money than keeping it in a bank. This is, again, a decentralized finance benefit. Well, that's a little centralized because it's on Coinbase. Coinbase is centralized. But still, it's possible because of crypto. That's why they're doing it. Because USDC is a crypto. Go ahead. Any other questions?
Yeah, I'm a little confused. I felt like earlier. Good morning, by the way.
Good morning.
And Miguel. I feel like earlier you guys were talking about USD. I thought you were saying it's don't invest in it. That is like the dollar.
So there's two sides to this, right? If you still don't believe in crypto and you just want to have dollars and not be worried about it going up and down with the volatility, you can keep it in USDC instead of dollars in your bank. And by doing that, you get more interest on the money. So it's still going to get inflation the same way a dollar will. Every USDC coin is the value of $1 at wherever it is at that time. So yes, it's going to get deflated, whatever. But you don't have this thing where some people are like, oh, I just lost a ton of money because I had Ethereum and now it's half the price. That's where if you're in that position where you don't want to feel that, you will still get the interest of USDC 15%.
Yeah, USDC, Vanice, is just sort of like to get your toes wet to more understand and feel comfortable within the crypto space, because you already probably have money in a USD savings account. So USD and USDC, they really mimic each other dollar for dollar.
Yep.
Like the only one that doesn't, and Miguel, we talked about this the other day, is USDT, which it fluctuates like,
and DAI too. DAI too. DAI is another one like
right,
that.
and DAI.
Yeah.
But the thing that I'm saying is I put like 2,000 in USDC just to get my feet wet to say, what the fuck is this thing? Like what is it? Because my understanding is USD a savings account. I've been doing that my entire life. So I am looking at the interest that I'm getting on that $2,000. It is more interest within an APY month compounded than I could make with $40,000 in a regular bank.
Think about how crazy that is, right?
That's insane.
What
And
about algo?
Big up to Vanese and Vivica and Vanessa, because I love to see the women up in here.
Yeah, I'll invite you guys up.
Conversations now.
No doubt.
Yeah.
I mean, this is very important stuff. I'm glad you're saying this, Fresh, because you're right. That was her gateway drug in a way. When I first started working with Fresh on the crypto idea, I was like, okay, you're going to have to educate yourself on a lot of pieces. But the first piece to understand is just the interest rate thing, right? Like 0.15, but also Ethereum. I think you did Ethereum first, right, Fresh?
I did.
Yeah.
And Bitcoin first.
Oh, yep. So, but then when she started looking at Coinbase and saying, whoa, 15%, that's 0.15, let's try that. And I think that helped her do more research. And then the questions that she came back with were more in depth over time because she had money on the table and she wanted to really understand it. And that's why I tell people, just put $20 so you start to just pay a little bit more of attention than you would if you didn't. And, for some people could do 2,000, some people can only do 20, whatever it is, just get in the game. Any questions from anybody else? Vanessa, Kenyatta, Vivica? Yeah.
I just want to add something for the USDC. So there's a company called Ledin. It's LEDN. They actually give you 12.5% on your USDC.
Ledin?
Yep.
It's an app?
You can go to ledin.io.
How you spell it? LE?
LED is in David, LEDN.io.
LED.
12.5% on your USD, which overcompensates for inflation on a yearly. So if inflation historically is 3%, they just call for a quarter. Your money's making less if you keep it in a USA bank.
Yep.
They're only giving you 0.1 if you're lucky. So if you're putting it in something like Ledin at 12.5%, you're actually making some gains.
How do you spell Ledin again?
It's LEDN.io. But so do you say, are you putting it in as USDC or are you putting dollars in?
You have to, I believe they take dollars or USDC. So
okay.
You just have to check it. I'm going to probably put a couple G's in there and check it out. It's backed by Genesis, so it's legit.
Have you used it?
I'm about to. I know some of my friends have already used it. And they give you like 6%, I believe, on your Bitcoin.
Oh, yeah?
What do they do?
Tell the percentage again, Vivica. How much you say?
12.5%.
Oh, wow. Algorand, who I haven't explored fully yet, I think does like 6. But you just said 12.5?
That's
insane. Why you didn't private message me that?
I've been bombing you with so many things. I can't even.
So we got beef.
Wow, that's pretty crazy. I'm looking on the website. Bitcoin and USDC, it says.
Yes,
up to 12% though. It says up to 12%. So sometimes these sites do that, and then it's like in order. So there's another one called Nexo where it gives you like 8 to 12%, but you have to buy the Nexo coin to open up the higher levels of interest, which is fine because sometimes that, like I know people that have done that too, and the coin goes up in value. So you got to understand all these pieces, right? Because these systems, the genius of them is they give you kind of like stock to use them. They'll give you coin of their company because you're using it, but then they also sometimes ask you to buy some coin to use it. So, but again, start understand this is so crazy. When you start seeing it, you're gonna be like, how are they doing this? The reason they're doing this is because there's an automation. They have very little people, very little overhead, so they can give you a lot more than the traditional markets can. All right, so for any other ladies in the house that have any questions, you know, it's very cool to see as many different people. I know there's a lot of possible questions. I know I said a lot, and people are saying a lot.
Where's the group you're talking about?
Oh, crackingcrypto.club. If you go to crackingcrypto.club, we meet twice a month. We help people set up their wallets, start borrowing against, understand how to fully take advantage of this. And we just met last Thursday. We literally were walking through wallets and making sure people were set up right. Fresh was one of them. Fresh wallet is looking good.
Looking good. Vivica has a club or something coming up. I was gonna tell Vanessa to join that one. I guess Vivica, you getting that ready, correct?
Tell us about it.
Yeah, I'm just gonna do a crypto 101 class just for, I have a lot of people coming to me that are like, hey, what are you doing? So
Do it. It helps everybody, right?
yeah,
The more people in,
even if they're just getting USDC points, right? Like even if they're just doing a letter or something, it's 12.5%. Like there's so many ways to make money without getting too much risk involved. So
100%. 100%. How about you, Vanessa? Any questions? Kenyatta, any questions? Moody?
What's up, Miguel?
What's up?
Family?
Say it again?
I said hey to everybody else as well, too.
All
How
right.
y'all doing?
Any questions?
Yeah, I have a question for you. If it came down between XRP and ADA, if you had like $500, where would you put it? Which one and why?
I would probably, not financial advice, but I would put it probably in ADA because XRP has a lawsuit. They're winning it, but who knows what happens. And ADA has a lot of heat behind it right now, and it's down pretty low right now. I bought it probably like 80 cents. It's pretty close to that. And they did a good partnership with a few countries in Africa. I think they're really angled to solve a lot of the problems that Ethereum has with the gas fee. It's a good project. It's one of the top projects in the whole cryptocurrency space. Our XRP has been around for a long time. I actually bought XRP when it was 30 cents, so I'm doing pretty good on that. But it's a risk because XRP has a lawsuit, and who knows what's going to happen with that.
I think they're gonna win that lawsuit.
I think so too.
And also, like, I feel like the way the bravado of the crypto space is people support the coin they're vested in. So I feel like if XRP, even if strangely they lose the lawsuit, I think the people that are in are gonna fucking rally. And even if it's just for a period of time.
And the reason why I first invested in XRP was because they said XRP could become the currency of Europe. When I heard that, I said, you know what? Back then it was 30 cents. I did my whole, all right, I'm not going to miss this one again. Like I saw Bitcoin when it was 30 cents. I put in $100, like whatever. And, it's up a lot. And same thing with Matic. I saw Matic was 30 cents. I started doing the research. I'm never again going to not do the research on a coin that I hear good information about. I suggest you guys do the same thing and put in $100. 100. I mean, some people you can't do that. I understand, but if you can, that $100 will send you a little bit further down the rabbit hole. But what happened with XRP was then the lawsuit came on. They stopped letting people buy it, so I kind of forgot about it. And then I looked the other day and I was like, oh, nice. So.
Yeah, they just teamed up with the Bank of Egypt or something like that. Well, the technology did.
Oh, they did? I didn't even know about that. See?
Yeah,
so there's another good way of looking at it. What you want to do is called dollar cost average. So what that means is, like I just said, I put 100 in. Then good stuff, you hear good stuff, put another 100 in. You hear more good stuff, put another 100 in. You look up, you're adding to your position. Even though you got in at a higher number, you are continuing to support that project, right? So it's more likely that your value will go up, and you're making the value of the first time you invested higher, and more people are going to invest. If you're investing, more people probably going to invest as well. So instead of just putting like 5,000 in at one shot, which would have been good if I did it at 30 cents, but I didn't believe in it as much at that point. Over time, you believe in it a little more, but it's also a benefit in times like this when it's going down, right? So if you were like, I know people that I was talking to 2 weeks ago, they dropped like 30, 40, 50,000 in one shot, and now it's all down. Instead of putting $500 a day or $1,000 a day, they'd be in a much better position today, right? So it's better to ride the wave like a surfer instead of like just diving in and belly flopping, you know?
Meg, can we share with the room where people can kind of find the information about the coin? Like I know Vanessa just got, like, she's a brand new rabbit.
Okay.
She's getting ready to jump in the rabbit hole, right?
Yeah.
So for someone like Vanessa, like I told her when she goes on Coinbase, go to the homepage and look at what some of the news feed is telling you. But there's got to be, maybe anyone around this room could just throw some.
I'll tell you what I use. I use CoinGecko. There's also CoinMarketCap, but I just heard today that CoinMarketCap is owned by Binance. And sometimes Binance does, this is what I heard. I mean, again, I heard it. It's not defamation or anything like that, but that sometimes Binance could like change the information to benefit Binance on CoinMarketCap. So I use CoinGecko. I don't know if anybody owns them yet though, but I use CoinGecko.
I use them.
Yeah. And then basically on CoinGecko, you can see the current market caps. You can even store your portfolio. That's what I do. I store my portfolio on CoinGecko. I put in every coin I bought, how much I bought of it. You can even put what price you bought it at, and then it'll tell you how much money you made, how much money you're down. Right now, most people are down. But if you're getting into space right now, you are like, oh my God, lucky, right? Like you're coming in like in the perfect time.
I'm thinking more resources like for people to learn about what the coin does.
Okay, so I'll tell you some of
follow the trend.
So to me, what I do is, and I'll give you the full breakdown. When I look up a coin, first I go on CoinGecko, I look up the volume of people using it, right? So one thing, you can see how many people buy it and sell it every day. But then I check the website, right? They all have websites listed. They have Discord communities. They have Twitter communities. I look at all that. And if I see like a lot of commenting and stuff, I'm like, ooh, this might be kind of hot. I go into the Discord. I start trying to see if they're real people. I ask questions, right? That's what I mean. It's due diligence. Like, you're just throwing money in a coin, that's gambling. But I like try to fully understand what they do. You know what I mean? Like, if you think about it as an idea, not just a coin, do you understand the idea? Do you believe in the idea? Saludos from Mexico. I got some people from Mexico checking us out. Awesome. So that's how I do it, right? But then I go on YouTube and I like, there's a video on Matic that I watch like every few weeks just to make sure I fully understand, because of course this is like rocket science stuff. So I watched it again yesterday, right? Because I'm like, all right, whenever I talk about this, I want to make sure I'm not saying the wrong thing and I fully understand it. So every coin you can do a YouTube deep dive on as well. And some coins you're going to find out stuff that you're like, oh, I'm glad I didn't invest in that, right? And some coins you're gonna feel better about. You gotta look at the good and the bad ones too, right? You gotta look at the good reviews and the bad reviews, right? It's just like everything, right? You don't only take the good advice. You on Amazon and you look at the bad reviews and the good reviews, right? Same idea with all this stuff. And Bitcoin, you probably find the most on because it's the oldest, right? So one good video that you should really look up on Bitcoin is, I forget, but I think it's called like the best asset ever created. And basically what the guy says is owning Bitcoin is going to be better than owning Manhattan real estate. He says because it's finite, it will power the entire world, and it will be around for the foreseeable future of humanity because it solved all the problems of previous asset classes. Once you really understand that, it's really hard not to like put a few dollars in and just be like, all right, if anything, I'm just supporting that movement, because that movement, if that works, we're talking about, I come from the Bronx, a poor place. There's poor places like the Bronx all over the world. It literally can change that for every poor place in the world. And if you understand that and you understand how early we are in it, it'd be very difficult after you really do that deep dive not to put a few bucks down. Even now, even when it was at 65, no problem. Keep putting money in. I put money in every week in Bitcoin. I don't care what the price is, right? And I'm not saying $1 million. I'm not rich like that, but I put $20 every week, $25. I don't care what the price is. right? And that's my plan forever, pretty much. Any other questions? I got Angelique.
Well, I just wanted to tell, because I know Fresh had asked some resources. There's a couple of apps that are really good, like Newsfolio, Folio is a really good app that keeps you updated with some of the coins and what they're doing. There's Crypto Folio as well too. I'm sorry, no, it's called Crypto News, which is a good one as well too. I always go onto the Twitter pages because most of the legit coins have Twitter pages. They give you a rundown of some of the projects that they're always doing.
Mm-hmm.
Like Miguel said, YouTube is a very valuable aspect. I use that most of the time. There is a person I follow on YouTube who I feel like he's really legit without all the hype and pompous that some of the YouTube people do. His name is Coin Barrio.
I never heard of that guy. I gotta check him out.
Yeah, I'm sorry, Coin. I don't even know if I'm saying it right. It's Bureau.
Can you DM me that one? DM me that. I want to check that out.
Absolutely. Yeah, he is legit. He comes highly recommended. He doesn't do all the dances and smoke. But definitely, I think the first thing that anybody getting into crypto really needs to learn the language. There is an app called The Language of Crypto. Not the app. There's a page. I gotta try to find it, but if you Google The Language of Crypto, really learn what blockchain is, mining, and
So actually, we got Osiris in the room. Me and Osiris are working on what are we calling it, Osiris? Like a directory that'll basically have the key terms that everybody should understand if you're gonna be in this space. We're almost done with it. I'm gonna give it away free, but the idea is these terms like liquidity pool. Milan brought that up. I know most people don't even know what that is, but liquidity pool is one of the coolest things about decentralized finance. It's kind of like if Visa partnered with you to split transaction fees. This is what liquidity pools are. Basically, by holding the coin, they say, we will give you a percentage of every transaction because you let us do this. And that's how I was making money. I made like $500 in a week of doing this on one website, right? And all week, it was every week for a few weeks, right? So, and I'm not even talking about millions of dollars I had in there. I didn't even have a lot of money in there. But because they needed it and I was willing to do it, they rewarded me, right? And that is powerful, man. And it's one of many cool aspects to decentralized finance. Any other questions? Vanessa, Angelique, Jeff? I'm about to. I know I've been on for like hours. That's awesome, though. I'm glad we got it going. Hey.
Yeah. So, can you sort of like just do a little breakdown of the last commentary you just made, like that last part of it, the DeFi
liquidity pool?
Yeah. Could you like break that down?
Sure.
Itemized way so I can like really follow.
Sure. Okay. So, all right, I'm gonna try to do this very simply, but somebody explain it to me too. Actually, Milan, you know it pretty well. Do you want to try to explain it? Are you still around?
What do you want?
Liquidity pool. What can you explain what a liquidity pool is?
Yeah, I mean, like the broad context of it, I understand. I just like the actual platforms.
Actual platforms. Okay, so
the actual specific plays that you made. You said.
Okay. So I'll tell you the specifics. Okay, so there was, and it's still around. It's called Krill. If you go to polywhale.finance, it's a Matic side yield farm. What they were giving was 2,400% interest in the Krill coin. The Krill coin, when I first started getting it for free, it was like $80 a coin. Now it's like $10 a coin, but I was getting a lot of them a day for a while, right? And that's basically a yield farm. What I heard about yield farms is the coin goes down and down until it goes to nothing. So that's where I said, you know what? I rode this wave long enough. I'll jump out, especially because everything is down right now. I'm sure that's going to go down as well. I'll take my winnings and put it into something like Matic instead of keep riding that wave down, just in case it is a wave that's going down. I could be wrong, but I made money. I'd rather make money than lose money. So I said, let me take it out and put it in there. So that was one. There's another one. There's a bunch actually. It's curve.finance. Curve.fi, which is curve finance. There's actually one that I'm doing still right now is if you stake your Matic on Aave, aave.com, but you got to be on the Matic network, which is a little bit of the, the matrix. And I show my people on and I made videos about it here actually too. If you put it on Aave, on the Matic side, you get free Matic every day. So let's say we were just talking about this, right? I told you one of the coaching clients I have, I do this. Let's say you're getting 10 free Matic a day. And right now Matic is 80 cents. Let's say you put in 10,000 to get 10 free Matic a day. If one day Matic goes to $5 a day, that means you were making $50 a day for the entire time. Let's say this is 3 months. That's $4,500 from just having money sitting in a place that's not your bank account, right? On top of the fact that you have this asset, most people just have the asset and keep it on Coinbase instead of putting it in places like this that they'll give you interest. So Gemini gives interest on a lot of coins, including Dogecoin, actually. They give it natively. Gemini, you go in and you press earn and you stake your coins. Coinbase doesn't do it yet as much, but a lot of these websites do. There is some risk to doing it, though. These are decentralized finance places, so they can get hacked. But they're not just going to hack you. They're going to hack the entire system and remove money from it. So it's not like you just going to lose all your money. Unless you give somebody your passwords on your MetaMask wallet, it's very hard for you to get hacked. The only real way is if you give people your secret phrase. That's really the only way to get hacked. So did that answer your question?
Yeah, I mean, that gave me, thank you so much. I appreciate it.
No problem.
Yeah, and you can also use liquidity pools to get like any 2 pair coins you want. Right? So for example, if you have USDC, for example, and you want Dogecoin, right? You can go and pool with USDC and Dogecoin. And when people start to sell their Doge, you'll get more USDC. And if they start to sell this USDC, you'll get more Doge. So that's a good way of always trying to get 2 coins at once as well.
And you could do that on the exchanges, Uniswap. But Uniswap, you're going to pay gas fee. You can do this on the Matic network under QuickSwap. And it literally costs less than a penny every time you do something. That's why I'm such a big advocate of a Matic, because when people use it and you realize you can make 10,000 transactions on Matic and not even spend $1, versus every time you try to do something on Ethereum, it costs $10, $15, $50, $100, $500, depending on when you do it.
Once they launch ETH2, they're going to, I think
95%, they say.
Fees are going to drop. It's
so that's the way. Go ahead. What you were going to say, Kenyatta?
No, I was saying the Ether charges are ridiculous, particularly around certain times of the day. They're higher than others. But they definitely need the success system stat.
So that's what Fresh said is right. I'm waiting for ETH 2.0 to come out and see how much that gas fee goes down. Even if it's 95%, Matic will be cheaper. So that's where if Matic can still do well after ETH 2.0, I'm going to keep it. If it doesn't, I'm going to move it into Bitcoin and Ethereum, right? If I think the gas fee is solved and Matic doesn't have any other thing that makes it valuable other than, it has this big network, I'm probably going to move a lot of my Matic money into the safer coins of Bitcoin and Ethereum. But again, that's why I say it's more of a trade. If you join late, I say the way you got to think about investing in crypto and anything is it an investment? Meaning, are you willing to hold it for 5 to 10 years? Is it a trade, which means you have some type of bailout moment that is either a price or something happening, like I'm just talking about with Matic, or is it a straight up gamble and you're willing to lose your money? You're going to throw it in there and you don't care if you lose it and you hope you win, but you're more likely to lose. You got to really understand what in any scenario, what are you doing? Are you doing one of those three? And if you think you're doing one and you're actually doing the other, you're going to end up in a world of hurt and feel like, oh, this is not for me. but it's really because you just had the wrong mindset about what you were actually doing, I believe. So I think I'm gonna end it now. I did 2 hours. My kids need me to take them outside. I think we did a good job. Thank you, everybody who came by. Angela, you got any questions? Vanessa, any questions? Vanice, any questions? Vivica, anybody?
Nope. No, this was great. Thanks. Yo, I wanna say, Miguel, you're the best. I love you, brother.
Love you
This was
too.
so helpful.
No problem.
And I don't know if this is helpful to everybody, but I've been following this guy on TikTok. It's at Venture Capitalist.
Oh, I seen that guy. Yeah. You showed me that guy. Yeah.
Yeah, he's really. I don't think he's a scam. Like I think I know he does some of his research through bots and things like that, but he's been a little bit spot on. So if anybody is interested, don't say that I said because I don't want to hear it.
Do your own research.
But check it out.
Jeff, you got any questions? Any comments? No. All right. Cool.
What do you think about Internet Computer or Uniswap?
To me, I own Uniswap. Internet Computer kind of grew too fast for me. It felt kind of fake in a way. How fast it grew.
It's been around since 2015.
Oh, it has.
They did their ICO, in 2015-16. Yeah.
So what made it go so high so fast this week or last week? There was something they grew like ridiculously fast.
I mean, I don't have more information except my understanding is that there are a lot of people who have supported the project for several years.
So again, I got to do my research, right? The same thing.
Their perspective is that they're the next innovation. That's in their mind better than Ethereum because of the technology that they're using.
So you just passed my alarm meter. You spoke about it. I heard about it. Most people have been talking about it. I got to do the dive now. I'll do the dive and I'll decide if it makes sense to put money in it. And if it's a gamble, a trade, or an investment.
They're claiming that one of the things that they can do besides everything else that Ethereum can do, but better and faster, is they can also enable the cloud computing like AWS, but at a million times cheaper and unhackable for any companies or individuals who want to use it. And the web pages and apps can also be developed on it, also using processing and storage on the public.
You mean like storage space and all that?
Processing and storage space.
So AWS
on the public internet. So they're claiming that, and they've got the support of big VCs. They've got 2 developer firms.
So they're their own blockchain, or are they built on top of something?
Their own blockchain. They're their own thing on the internet, on the public internet.
Okay. So again, I got to research it. I think we all should research it.
Which outfit is this?
Internet Computer.
Yes, this is called Internet Computer, and they have some real legit technically proficient people, experts in cryptography, and they have something unique around generating random numbers that doesn't require much processing. Basically, that's kind of their claim to fame.
Just do some research on it, but it sounds like stretch to me. All they're like sort of like compressing into what the outcome.
Yeah, because Ethereum does a lot of that too. That's the thing. Ethereum does a lot of that.
I hear what you're saying, and I haven't done enough research, but I think they claim that it's unhackable. And given all of the hacks that have, with the government, you know what I'm talking about, right?
Yeah, of course.
SolarWinds and the Russian quote unquote Russian cyber attacks. And a lot of malware, issues, right, that are affecting governments, city governments, state governments. It's going to become even more of a problem, actually.
And where can you buy it? Where can you buy it right now? Coinbase?
They claim their tech is unhackable. They claim that what they've got is unhackable.
But you can buy it on Coinbase right now or no?
Yes.
You can.
I just looked it up. You can.
So that's a indicator. If Coinbase lists it, it's usually more vetted than most. Like Dogecoin is not even on Coinbase because they don't believe that it's solid enough in certain areas to list it to their customers. So that's an indicator that it has been vetted, but that doesn't mean that it's gonna, do well. Who knows? You got to do your own research and then, yeah.
I may develop on that.
Oh yeah. I'm gonna look into it because I develop stuff.
They've got two funds, and they've got VC firms that are created a fund for people to develop apps, and they have a decentralized social network app on there, and obviously the public cloud that's supposed to be really cheap as well.
Sounds interesting. I heard a lot about it. I mean, not a lot. I've heard like at least 5 or 6 different times about it. I gotta look it up. Again, though, right now, I guess part of where I am in my investing / trading / gambling is I'm just piling up on assets that will allow me to cash flow my crypto. What that means is I look at crypto like I look at real estate. I want to have enough crypto that pays me every month so I can live off of it. That's my future plan, right? And I'm working on that. So I'm only buying assets that I know I can do that with right now. And then I'm borrowing off of them to live. Actually, I bought an iPhone. I put some new wheels on my car of borrowing off my crypto the same way I could borrow off a building that I own or a home. And that's my current strategy. Buy assets you can borrow off of and eventually live off of that. And then also yield farm to get free money or interest in many different places to generate more income in different ways. That's basically my strategy personally, and that's what I coach a lot of people on. But the idea is I don't really just want to buy asset and let it grow in value. Like that's like buying one home and just hoping it grows in value. I want to own as many homes and have as much income as possible because of what I just told you earlier. Who knows what the job market and the space of entrepreneurship will look like in 5 years. So I'm trying to use my investment to generate income. So that's where I'm at. And I think I'll end it there. Thank you for everybody for coming by. I know it's 2 hours. Thank you. Looking forward to hearing where we are next week. I'm going to do this next week at 10 o'clock. I might be a little early for you West Coasters, but I got to try to get out of here earlier. But thank you again. Have a good rest of your weekend. Buy the dip. All right. Bye. Thank you. All right, bye.